大家好，我
Good
是
afternoon, dear audience. My name is Wu Yingmei, the partner of Mothers. A big thank to all of you for taking part out of your precious time to attend our today's webinar of Mothers. This is a great honor of Mothers, and also it also let us on the light of how important that sustainability has become. This is both a traditional and a new topic as early as 1987. Madame Breffer has proposed this very concept. And recent years, we have seen that the US and the EU has proposed and launched a number of the guidelines. So making the sustainability as the highlight of the doing business of the companies, while China is slightly lagging behind. So shall Chinese companies still waiting to see how it will evolve, or shall we be more proactive? So today we felt very honored to have invited Mr. Chris Fargo, who is the partner of Mothers, to share with us how the evolving sustainability landscape really show itself and how will the topic has changed the way you do international businesses. We provide simultaneous interpreting services for you. You may choose either Chinese or English channel for your convenience. And please leave your comment or questions on our comment chat box. Thank you. We'll leave a Q&A session after the presentation. Chris, the floor is yours.
Thank you, Yingmei, and good afternoon, everybody. So obviously, I don't know what Yingmei has just said. Despite my 16 years in Asia, I never had the opportunity to learn Chinese. But today, really the focus is from a business perspective. How will everything that's happening in sustainability possibly impact your business? So we're going to start with just making sure that everyone is on the same page in terms of what is sustainability, what is ESG, are they different? And to give you a bit of a checklist about whether your company should invest, because there's multiple drivers or multiple considerations when thinking about how much of a priority you should make sustainability. We'll then look at the regulations that are evolving across the world at a very light touch level. We'll then go into the EU regulation a bit more, which is the Corporate Sustainability Reporting Directive, CSRD. And then we can talk a little bit about how to get started if you've not already started, and how your approach might change for some of the changing regulations. So I hope that's okay. I think if there's any questions, Yingmei should have already mentioned that, feel free to post them in the chat and we will address them at the end.
Sure.
Okay. So I think the first thing to do is to try and demystify sustainability, because I think a lot of people get concerned that it's a big new thing, and it's really not so new. It's a newer term, but really it's just about what it now means to be a responsible business. And obviously that changes over the generations, what it means to be a responsible business. It changes a little bit by market and by country, what it means to be a responsible business. So firstly, when we talk about sustainability, we're talking about, is what we do today sustainable for the future in terms of the impact that it has on the environment, in terms of the impact that it has on society, and the ability for the next generations to do the same as us. And the way that we look at it is under the lens of E, S, and G. So they can be interchangeable terms, but really sustainability is the concept. And ESG is the way that we look at it. So you've got just a few examples here. There could be very long lists under environment, social, and governance. It's just a few examples of what sits there. And if we come back to what I was talking about just the evolution of responsible business, some things in this list for a long time you would have already thought were part of the responsibilities of a company. So for health and safety, for example, if something happens to an employee in the workplace or doing their work, I think it's generally accepted these days that it's the responsibility of the business. If we think about pollution, more and more pollution into waterways or rivers and into the air, we assume the responsibility is now with the business. I think that's fairly accepted. So some of the things that are newer are probably around climate change, which is obviously the big topic, and decarbonisation, and now saying that actually that is the responsibility of the business, and not only of the business, but for the business to take responsibility for what happens in its value chain, so with its suppliers as well, and we'll talk more about that later. And there's other areas which maybe are accepted that they're part of a business's responsibility, but maybe they haven't yet worked out exactly the best way of dealing with them. So gender diversity, for example, it's not as new a topic as climate change in terms of business responsibilities, but it's still a topic that's newer compared to health and safety. So I think, first of all, the point is here, it's not a brand new thing. It's just some more topics that are being covered under what it means to be a responsible business. Okay. So every year, Mazars does a global survey where we talk to the leaders of businesses of different sizes from different countries all over the world, and we normally speak to around about 1,000 executives. So it would include Asia Pacific and China. So in total, we've got 2/3 of businesses. This is from the 2023 survey. 2/3 of businesses are planning to increase their investment in sustainability initiatives. And that's up 20 percentage points from 3 years ago. So there's not many questions that we ask that over the period of 3 years would increase by as much as 20%. So certainly something, and I'm sure you're aware, that is hot on the agenda of boards. Also a similar figure, we have 2/3 of the companies globally. Again, these are companies of all different sizes that produce a sustainability report. And about 1/3 of companies that are either refreshing their sustainability strategy already or need a new sustainability strategy over the next 3 to 5 years. So one of the key questions that I really want is why? Because I quite often get asked, is there a return on investment of spending money on sustainability? Or what is the return? What happens if I don't spend any money on sustainability? So there's lots of different reasons. Some will apply more to you than others. So if I talk through the reasons, then hopefully you can decide whether it's important to your business or not, and how it's important to your business. So the first reason you would need to invest potentially is if you're directly impacted by regulation. And at the moment, if you're a Chinese company, I believe there's quite little regulation that would directly impact you. And even in Europe or UK, whilst there's more regulation, currently it's only the largest companies that are caught by the most complex regulation, which we'll come on to yesterday. But what's important to note is just because you're not directly caught by the regulation doesn't mean you're not indirectly caught by the regulation. And the reason that that is that when the regulation around sustainability is not just asking the company to disclose what they're doing and what their risks are and what impacts they have, but asking them to disclose the risks and impacts of their whole value chain. So if you're a supplier to one of these companies, you will be asked by that company what you're currently doing. So you will get asked ESG information from your suppliers. Perhaps you already are being asked this information in the form of a questionnaire. So if you're not sure, or you feel like this questionnaire may be going to somewhere else in your business, then I would ask to have a look at that questionnaire, because they're becoming more and more common. So typically, most questionnaires will ask you what your greenhouse gas emissions are, so what your carbon emissions are. Do you measure them? Can you provide them with scope 1 and 2 emissions, which are the emissions that you generate from your own factory operations, your own offices, your own company cars? And can you tell them about your scope 3 emissions, which are the emissions that you create from buying things from your own suppliers, from your employees traveling to work, for example? And this is data that you may well not have, because most companies didn't have this data 2 or 3 years ago, but increasingly they're gaining this data. They might ask you questions around your controls for what's called modern slavery, so child labor, forced labor, migrant labor. These are all common questions to be asked all over the world. And they might also ask you about your workforce diversity, so your gender balance, etc. So if you're dealing with large companies in the US, in the UK, in Europe, they're likely to be asking you these questions. And really what they're trying to do at the moment, because they're still in learning mode, is to understand where each of their suppliers are, so they can assess what their impact is as a value chain, because they have to report it. But like anything that you have to report, they want their performance to improve. And the only way that they can get their performance to improve is to drive their suppliers, which could be you, to also improve. So if I give you an example around carbon, because it's one of the most common ones, when companies take their carbon footprint to measure how much carbon that they're emitting, most of the time, only about 10 or 15% of the total carbon that they emit is directly from operations that they own. And the balance of 80 or 85% comes from their supply chain. So for them to make a significant impact and to claim a net zero journey of 2040, 2045, 2050, they have to get you, their suppliers, to also reduce their carbon footprint, which is why over time, not only would they ask you what your carbon footprint is, but what your plan is to reduce it. And more they'll ask you to substantiate this information, rather than it being just something that can go into a questionnaire. So I think this is a good example. So if you're not directly caught by regulation, you may well be caught by indirect regulation, because those companies that you serve are having to report. So hopefully that's clear. For brand, I mean, many brands may put sustainability at the center of their brand positioning, so they claim it's part of their values. And I'm sure you've heard about the risks of doing that if you're not careful with that and you make false claims, then you can be accused of greenwashing. But any brand, whether they put sustainability at the center of their brand or not, doesn't want bad publicity around one of those sustainability topics. And again, it's not always environmental. So for example, in the UK, 4 days ago, McDonald's in the UK were faced with sexual harassment and bullying claims. So obviously that has an impact on how consumers perceive them, but also their ability to attract and retain employees. Then there's your customer expectations as a whole. And this is why, as part of sustainability, it's good to engage at least with your top customers, which might be businesses or might be consumers, to understand what they expect from you. Because if they're planning a journey that has sustainability at its core, then in 6 months' time, 12 months' time, they might be asking you for information, or they might be reviewing their supply chain. And the reason that they're looking at this could be any of the reasons that I've already mentioned, or it could just be important because sustainability is core to their own individual beliefs, and they want to ensure that the companies that they've worked with have genuinely integrated ESG considerations into their strategy and into their daily operations. Because there's one thing saying it for any strategic thing, it's very easy to say, but the execution and integration through daily operations is very, very difficult. Employees, so if you work in professional services, for example, in Mazars, and you're working with young and well-educated employees in particular, even at interview level, they may ask you around your credentials for sustainability. Increasingly, we're asked that, and it's part of the consideration of employees. So you need to keep up to speed with what your employees are thinking, and if it could cause you an issue in the future. And finally, last but not least, for investors. So for a long time, the way that it's been perceived, we can most easily move to a low carbon sustainable world is to redirect the capital flows to greener projects. So many of the banks, insurance companies, private equity have pledged or signed up to agreements whereby they will redirect their capital flows. And obviously they need to do their due diligence. There's more and more official labels coming into play in terms of what constitutes a green project. And therefore, over time, there'll be a shrinking pool of investment for those that don't have ESG credentials, or perhaps it will be more expensive. So I think going through that list, it's key to identify which ones might apply to you, and then obviously to find out more about those. And quite often it means engagement with employees, with suppliers, with investors, with customers, and this is a key best practice for setting a sustainability strategy. Okay. So even though I said it's not all about regulations, I think that the regulations dictate a lot of behaviors. So it's good for you to understand what your customers might be going through and what could impact you. So at a very high level, because there's much more happening than this. So in Europe, which has the most stringent regulations, you have the Corporate Sustainability Reporting Directive taking effect from the 1st of January 2024 for the largest companies, and I'll show you the timeline later in the presentation. And one thing that's important to note here is it doesn't only apply to EU companies. For the largest companies, so for example, if you're a Chinese headquartered company and you've got a listed subsidiary or just a subsidiary with significant operations in the EU, then you may come into this regulation. And we have a guide, we have a decision tree for you, which I will flash up on the screen later, but I've also provided a QR code so that you can go through and work out whether it impacts you as a parent company or it might impact any of your subsidiaries. So it's really easy to use. So that's shared later in the presentation. Then there's IFRS. So the International Sustainability Standards Board, which comes under IFRS, has so far published 2 standards. They were published at the end of June. So IFRS is behind the EU, but they're working together to make sure that the standards are as close as possible and can be interchangeable. So the first standard is a very general standard about materiality and the topics that you could potentially include. And the second one is all about climate-related disclosures. And the US is behind both, and so far hasn't agreed anything because it's been caught really for political reasons. But the focus on the US is to identify those risks that could have a material impact on the business's financial performance. And again, it's very much focused on carbon. So all three of them, as a minimum, have a climate focus and a carbon focus, but the EU has much, much more than that. Okay, so if you want to understand something that all three sets of regulations, so Europe, international, and the US have in common, then at the center, they all have the recommendations that came from the Task Force for Climate-Related Financial Disclosures, so TCFD, which some of you, I'm sure, will have heard of because they're already a disclosure requirement in Hong Kong, in Singapore, for example. So very simply, under TCFD, and the same is true for all of the regulations that I've just discussed, you always have to disclose under 4 pillars. So you have to disclose under governance. So how does your organization structure its governance around each of those specific topics? So in this case, we're talking about climate. How could the topic, so climate in this case, impact or potentially impact how your organization's business model works, how its strategy works, how its financial planning works? So lots of these disclosures are qualitative disclosures, not necessarily disclosing numbers. What your risk management processes are around this topic, and also what your metrics and targets are. So what are you trying to achieve and how are you performing against those targets? So it's always around those 4. And for TCFD, there was 11 disclosures around those 4. So that's the structure. So don't be thinking in your head it's all around numbers. Some of it is words that we're disclosing. Okay, the big difference between the 3 sets is that the EU, apart from having more standards, it's also more complicated. So whereas the IFRS and what the SEC has proposed in terms of disclosures is all about understanding how ESG could impact the financial performance or the value of the company. So it's almost a selfish way of looking at it, if you like. For Europe, they've taken a much broader view and they look at what's called double materiality. So how could ESG impact the value of the firm, the business model of the firm, but also how does what the company is doing impact society, impact the environment? So that's what they're looking to report. So as context, you need to be aware it's a slightly broader remit that they report on. Okay, so what sort of topics do the regulations cover? So as I mentioned, the EU is the most advanced. So they've just released 12 standards. So we're almost talking about IFRS all over again. It's a huge change that 12 standards are being released. And these are just the first 12 standards. So these are sector agnostic standards, and there will be more standards coming specific to sectors. So for the EU, if the topic is material, if the standard is material, and that's a big part of the assessment that needs to happen at the beginning, and there's something which is audited as to whether the company was correct in its materiality assessment, then they would have to report against all 12. So you can see that there are 5 related to environment, or the ones that begin with E. So climate change, pollution, water and marine resources, biodiversity, and circular economy. There are 4 that fall under the topic of social. So how well they look after their own workforce. And this is where it ends. So on social, you can see that the only one that is fully in the company's control is own workforce. Everywhere else, they're reporting about what happens in their value chain. So workers in their value chain. So if you supply to companies in Europe, they would be asking you questions about the workers in your organization and how they're treated, because they have 5 disclosures to make around this. Also affected communities. So how do they impact the communities that are related to the value chain? And also what's the impact they have on the people that they are selling to? So you can see only 1 is internal and 3 are around their value chain. And finally, there's 1 on business conduct, which is the first standard around governance. So again, this shouldn't apply to you unless your operations in the EU are so significant. Shouldn't apply to you directly, but indirectly, this will lead to information requirements from you. So if you were a very large company in Europe, the chances are that all of these topics could be things that you need to report on, especially if you're a large mining company, for example. If that was the case, they will have 82 disclosures to make. That's what the DR stands for, disclosure requirements, which would include approximately 1,100 data points, of which 1/3 are numeric or quantitative, and 2/3 are qualitative. So just to give you a view as to how significant this change is for them and what they're having to go through, and hopefully to give you an idea of what areas they're going to be asking you for more information in, so you can start to become a bit prepared. Okay, so we're just a bit more on CSRD, and I think I will have covered a lot of it. So what are the key features of CSRD, which again is the Corporate Sustainability Reporting Directive, and that's the EU legislation. So it's a big change. So there used to be something called the NFRD, which I won't explain if you haven't heard of it already, and that only was mandatory for 3 of the EU countries, whereas this is mandatory for all 27. It's really there to support the EU in reaching its sustainability goals. And it's also there to make sure that instead of everyone reporting under different standards, different frameworks, using their own approach, that we have one common way of reporting, which is the European Sustainability Reporting Standards, which are the 12 areas that I just went through. And there's not much room for individual countries to implement in their own way. The only thing that's been left to them is what sanctions it can impose on anyone that doesn't report, and who can provide assurance or audit on these disclosures, because I haven't mentioned it yet, but it's a requirement in Europe. Not only do you report under these standards, but that you also receive an audit opinion on the standards. So it's mandatory reporting and mandatory audit in at limited assurance level. And obviously for auditors and accountants, not just those in the profession like Mazars, but I'm sure many of you on the call, it suddenly means that people need to learn a lot very quickly, because typically, even though the subject matter experts on all these topics like pollution and decarbonization may not sit in the finance team, where the data is best handled for accurate and robust data, the home is tending to end up in the accounting teams, because they're the ones that can deal with this data best. They're used to the checks and balances that go with disclosing data. Okay, so just the main requirements. So you have to publish the sustainability statements in line with the ESRS. There's a specific place in the management report And like financial reporting, it's under the supervision of the management bodies, especially the audit committee. So again, new skills for the audit committees to learn as well. It's subject to mandatory assurance, as I mentioned. So the first set of reports, which will be issued in early 2025, will have mandatory assurance, even though the standards for how to do the assurance don't come in until the following year. So if there's any auditors listening, the first sets of reports will be assured using ISA 3000. And finally, it's a very interesting point, and again shows the collaboration and consultation that's expected as part of sustainability reporting. It's a requirement that the workers in the business are consulted in terms of what information should be included in the sustainability statements, and have their opinions along with those of management supervisory bodies. Okay, so finally, I already mentioned it, but the first 12 standards that have been released are sector agnostic. In summer next year, there'll be a second set, which will be sector specific, things like mining, for example. And then the reporting areas, as I mentioned, are the same as under TCFD. So you always report around governance, strategy, how you manage the impacts, risks and opportunities, and your metrics and targets. Okay. So timeline in terms of when China or Asia Pacific could be impacted, and there's more information in the guide that I'll share with you on this. If for the first year, it would only be if you had subsidiaries that were listed in Europe for the first year or two, or that you really have significant operations. But parent companies, and this is what's interesting, parent companies that have significant operations in Europe, so over 150 million euro of turnover, can be impacted from financial year 2028. I'm not going to go through this now, but this we have a guide that will come up in 2 slides time, and it will walk you through 2 different decision matrices to see if or when you're directly impacted by this regulation. So this one is for if you're a non-EU parent company. So for any of you listening that are working in a Chinese parent company, you could follow this flow to see if you're required to report and when you're required to report and under which standards. And then also if you've got EU subsidiaries and you're responsible for working out whether they're required to report, there's another decision tree here for you, which I know it probably looks like a lot of detail now, but it's quite easy to follow when you spend some time on it. And we have a lot more information here, and the decision guide with all of the case studies, the same decision tree, is the pink one here. If you follow this QR code, it will take you to all of Mazars' regulatory hub information around sustainability, but the ones that are particularly relevant to what we've been talking about today that you'll find in there are the ones that are shown on the screen. So it's an overview of CSRD. It's a very, very easy to read, non-technical guides. Another one that's specifically written for non-EU groups, which is the pink one. And then the dark green one, which is an overview of the sustainability reporting standards themselves and some of the phasing in of those. And in a few weeks' time, we'll also produce a similar guide on the 2 new IFRS S1 and IFRS S2. So we'll post them in the same place on the public website. So if you capture that QR code, you'll have it for the future and you can save it to your favorites. Okay, So if you haven't, I've got one more slide that I want to go through and then we'll open to questions. So I imagine that people that are listening will be at very different stages in terms of what they've done. Some of you might still be trying to work out what really is sustainability and are we doing it, or is it relevant? Is it just CSR? Some of you, I'm sure, will have lots of policies already in place around the topics that we talked about and maybe only have one or two gaps. What's probably quite likely is that not many of you have really formalized your ESG or sustainability roadmap and how it links to your business and daily operations. That's normally kind of the status. So if you haven't started, then there's a 5-step process that we recommend. The first one is to undertake a materiality assessment. So to consider, based on a sector review, engagement with your stakeholders, what you think as a business and as a leadership team, which are the topics that are most important to your business and your stakeholders. So, you know, is it decarbonization? Is it workforce well-being? Is it pollution? Is it health and safety? And to try and shortlist some of those. Some of them you will have done a lot on, some of them you might not done so much on. So that's the first step, to prioritize which of the topics that are relevant to you and to really understand why, and everyone in the boardroom to really understand why. And normally that takes some time, otherwise you can't have a good conversation there. And that may be where you need some third parties to help you facilitate that conversation and give some examples that are very real to your business. Once those topics are understood and why they're understood, then normally the leadership teams and the management teams are able to identify how your existing business model might be impacted by the changes that are happening. So I'll give the example again of carbon and climate. So as part of the disclosure requirements, whether it was for TCFD or CSRD or IFRS, you have to identify how your business and your value chain would be impacted in different climate scenarios. So I'm sure you know that the climate scenario that we're all aiming for is the 1.5 degree climate scenario, but there's also a requirement to test your business resilience at 4.5 degrees and at 8.5 degrees. And there's lots of information available about what happens to the world in those scenarios. So you can see, for example, if you're using crops that are grown in southern India, for example, maybe the climate is not going to work anymore in that area for growing those crops, and therefore how you grow them, where you grow them, your logistics, your supply chain, every single thing would change, and maybe even some of your service offers would no longer be relevant. So that understanding how it changes your business model and strategy is a key part of that. Then once you've identified how you may reshape your business and what risks you have and how you're going to manage those risks, it's also going through how your governance and your organization will change in terms of who's responsible, how often these topics are dealt with by the board, how you're going to cascade through the business, what policies you're going to change, what training you're going to need, etc., etc. So really the implementation. And then finally, how you're going to monitor your progress in terms of KPIs on a short, medium, and long-term basis, preparing yourself for reporting to those customers that you now likely need to report to. And if you desire, voluntary reporting to the market, or potentially mandatory reporting to the market if or when that happens. So normally that's the process. So, but it really needs to start off with making sure the board and the management team understand what the topics are and why they're relevant, because you just can't get anywhere while it's an abstract concept. For those of you that might directly fall under CSRD, which again, I'm assuming it's quite limited. Obviously, it's a different process. There's a lot more depth to the process than this. And the piece around the materiality assessment, which is audited, is really, really important. So understanding the impacts that you could have on environment and society, how severe those impacts could be, and therefore what you choose to concentrate on, how that's decided and how that's documented is a key part of the audit. But I think people should reach out separately if that's the case. So I think that's all I wanted to say. So I think we'll move to any questions that might have come forward.
Thanks, Chris. 我们看一下，大家有没有问题？
Well, we were still waiting for the questions to come through. You may either
You need to choose your channel as well. You to choose the English channel. Otherwise, when I speak Chinese, you're not able to listen to the translation.
Got it. Yeah. Okay.
对，大家有没有问题？如果有
So
问题，
wondering if we've got any questions from online, you can ask the question in Chinese or in English, both okay, because we've got the simultaneous interpreter translating your Chinese question into English, or you can put your question in the chat box so that we can read it out for you. Thank you.
Okay. Before someone asking question, I have question. That is
Hi, I have two questions.
Okay, please, Stella.
Yeah, the first question is, if my company is not included in the reporting scope of the CSRD now, do I still need to consider this issue?
Yeah, so I think the first thing to do is to, do you deal with, do you sell to companies that are in Europe? If you're not in scope, then really what you need to do is look at who you sell to. Maybe start with your top 10 customers, assuming these are business customers. And talk to them, or identify from the flowchart that we've given you whether they are in scope of the regulation. Because if they're in scope of the regulation, like I mentioned, they need to report on what happens in their suppliers as well. And therefore they would have information requirements. So if they have information requirements, you'll need to start to identify which information requirements and how you capture those information requirements and how you make sure that those information requirements are auditable, because that's the process that we're moving towards. So the same as you would for financial information, it needs to be as robust as that.
Okay, and following this question, same, because in different circumstances, it's very frequently asked the question. It's from cost effectiveness consideration. Some company, they are not prefer to start to set up the sustainability system from now on, when no regulation has been introduced. So if they haven't any international business, that's another aspect. So if they have, then what's the impact on the,
So
also,
yeah, I mean,
yes, I need to spend a lot of money to set up the system. So what impact will be really impact on our business if I have a lot of export to European or some other Western country?
So what the impact will be if you don't set up, you mean?
Yes, don't set up. Because
yeah,
they will consider the cost from cost saving consideration.
Yeah, so it's about, I mean, that was the slide where we kind of went through how you might be impacted. So normally it's not one reason. So, and I don't think the way for an investment, you normally expect a return on your investment. But I think for most companies, the situation is they're spending the money because if they don't spend the money, their revenue will shrink. Right? So if you don't spend the money and you're dealing with an international client, then there is a serious risk that you will no longer feature in their supply chain.
Okay.
So I'll give you one example. So for a semiconductor manufacturer that's listed in an Asian exchange, I won't be too specific. One of their largest companies is Philips, the electronics manufacturer in the Netherlands. They'd been reporting for 3 or 4 years already because they were required to report, but they had no substance to their report. Philips makes up 10% of their revenue, and they were informed by Philips that unless they made specific progress on 2 of their topic areas, they would lose their business. So then that becomes an urgent need to invest. Obviously, if you can no longer raise finance or hire employees, then you have a problem. So it's also a need to invest. So this is why what's really important is rather than just making a decision based on what you think as the business, it's to engage with your investors, engage with your customers, engage with your employees, because they will give you a wider view and you'll understand what's important to them. And then if it's not important to you as a company, it's not important to them as a company, then maybe you decide not to invest. But if there's a growing importance for you to be able to operate, for you to be able to sell, for you to be able to hire, for you to be able to seek finance, then obviously you should invest. But at the moment, some companies aren't having those conversations. So they have a sudden surprise, and it's not easy to suddenly create a whole system around data points that you've never captured before. So I think this is why you have to review this situation and decide for your company where it should sit in your priority list, but it must be an informed decision. And I think the concern always is that because the board don't normally understand this topic, because they're older, they didn't grow up with this topic, they're not in a good position to make an informed decision. So I would suggest that the most important thing is that you as a board member, leadership member, or management team, that you get the support that you need to make sure that the decision that you're making is an informed decision, because that's your responsibility to your business. Then if you decide to postpone or make it priority number 10, it's fine. But I think dismissing it because it's not well understood is a big issue.
Mm-hmm. So it relates to what kind of strategy you want to seek for, short-term or long-term.
Yeah, and you've got to remember that it takes, I mean, a net zero, for example, strategy, 2040, 2050, 2060 is not something that you do overnight. It's a really long-term investment, which is why, I mean, the UK, for example, as a country, it's 2050. But there's a lot to do to find alternative sources of energy, to find ways of reducing waste, of changing packaging, of reducing supply chains, etc. There's a lot to do. It's not a simple process.
Mm-hmm. Okay, thank you. 大家还有什么问题吗？
Wondering if we've got any question from online. If you've got any question, please propose your questions.
Maybe if there's no question, it's just maybe worth telling you very quickly how the carbon measurement works. because I think for many people, they don't know how we measure the carbon footprint. So just very, very quickly. So the carbon measurement for the energy that you use is obviously quite simple because we just look at your utility bills, etc. But the carbon footprint that you have from your supply chain, the way that it works as a starting position is that you just take your profit and loss account, your spend on your suppliers, and there's huge databases that us and others have, which are indexed to specific countries for specific items. And from this, we can turn dollars, pounds, RMB into carbon. So this is how we start and get a not very accurate, but a starting point for your carbon footprint. And then for your largest suppliers, you then start to work with your suppliers to find out their specific carbon footprint and replace it with the estimated data. So that's how you get a carbon footprint, which is why if you're a major supplier to one of these companies that's reporting, one of the things they'll want to do very quickly is change their estimated carbon data for your real carbon data, which means that you need to have done the process to have the data available to give to them and to be able to document. So I feel if you're not already being asked that, that's the most likely data need that you will have in the short term, what your scope 1, scope 2, and scope 3 carbon footprint is. And obviously we can help you with that. So if it's something that you want to start or understand the process, then please do reach out to us.
Yeah. 好，谢谢 Chris 的分享。
Well, thank you, Chris, for your sharing. So I was thinking, so maybe with the launch of the guidance or with the release of the report or the disclosure of the report is just a way to represent it. It's only a representation. So I think sustainability is actually urging us as companies to rethink how can we really benefit the people who are around us, or to put it more broadly, how can we really benefit the planet? So today's webinar is only a starting point from which we will start our journey. So this is a very new topic. We may need some time to think it and ponder it over, to think about what kind of questions or issues that we're facing on the road. If you've got any questions or if you need any help from us, we're much willing and honored to be your partner to contribute to your journey. The sustainability will be a theme that will continue itself. Please follow closely to our webinars to be continued. Thank you for your participation. Thank you for coming today.
Okay, Chris, then I think we can finish today. And then we will let everyone to take time to think of that. If any further question, you can contact us in the future.
Okay, thank you, everyone. Have a good day. 谢谢.
Have a nice day. Thanks, Chris. Bye-bye.